Hello everyone, I welcome you all for my today's video lecture on how to prepare final accounts. In this lecture, you are going to learn what is final accounts, what are the various formats for final accounts, and what are the various adjustments for final accounts, and finally, what are the various steps for the preparation of the final accounts. Let us start with what is final accounts. So final accounts usually prepared at the end of the financial year, that is on 31st March of every year. As you know that the financial year begins on April 1st and ends with the 31st March of every year. So before we are going to learn about final accounts. I'll explain about the accounting cycle. Accounting cycle is a step-by-step process. It starts with the journal book, where we have to write the journal entries using 3 golden rules of accounting. After preparation of the journal entries, and we need to prepare ledger book. It is a process where we transform or we convert journal entries into ledger posting, where we have to open various ledger accounts. So this process is called as ledger posting. So after preparation of the ledger posting in the ledger book, we have to balance the individual ledger accounts. So with the help of the ledger balances, we need to prepare trial balance. So after preparation of the trial balance, we need to prepare final accounts. It means we are required to prepare trading account, profit and loss account, and balance sheet. So in the previous lectures, we had a discussion on how to prepare journal entries using golden rules of accounting, and how to prepare ledger book with the help of the journals, and the preparation process for the trial balance using direct method and indirect method. So we had a discussion in the previous lecture, and now in this current lecture we are going to discuss how to prepare the final accounts. So final accounts are usually prepared at the end of the financial year. With the help of the trial balance, we are required to prepare trading account, profit and loss account, and balance sheet. There are basically two statements we are required to prepare under the final accounts. The first one is income statement, the second one is balance sheet. So the basic purpose of the preparation of the income statement is to find out the profit or loss of the business. The basic idea for the preparation of the income statement is to know the profitability of the business, and the basic idea of the preparation of the balance sheet is to see the financial condition or the financial position of the business. So in the income statement, again we have two subtypes of accounts we are required to prepare under the income statement. One is the trading account, another one is profit and loss account. So trading account and profit and loss account together called as income statement. So the basic objective of the preparation of the trading account is to find out the gross profit or gross loss. Similarly, the basic objective for the preparation of the profit and loss account is to find out the net profit or net loss. So balance sheet is prepared to see the financial condition or the financial position of the business. Balance sheet is a statement of assets and liabilities. And now we are going to learn the format for trading account, profit and loss account, and balance sheet. So without knowing of this format, we cannot prepare the final accounts. So first of all, we should know what is the format for trading account, what is the format for profit and loss account, and what is the format for balance sheet. So the first account is trading account. So trading account is basically closely associated with factory production. where the manufacturing process is going on. So that is the reason in the trading account debit side, whatever the expenses incurred at factory level, so that information, that expenses will be recorded debit side of the trading account. So it means that trading account debit side we record all the direct expenses. So we have debit side, as per the format debit side we have various expenses are available. The first item is opening stock. So opening stock is previous year, means when the business is closing at the end of the 31st March of every year, whatever the stock is left over in the business, that is called as closing stock. So closing stock is carried forward to the business. Again, that stock is used for production activities. So last year closing stock is called as this year's opening stock. So last year closing stock is this year's opening stock. Along with this opening stock, the factory owner or a owner purchases additional stock, that is called as purchase of raw material. Usually the material is purchased from the supplier either in the cash or credit basis. So purchase of raw material is the direct expense to a business. So that will be recorded debit side of the trading account. If any purchase returns are there, purchase returns means sometimes a business unit receives a defective goods. So when a owner receives a defective goods from the supplier, owner will return those goods to supplier. So such returns are called as purchase returns or return outwards, because the stock is going out from the business. So return outwards is also called as purchase returns. Why it is called as return outwards? Because the stock is going out from the business, from business to supplier, because supplier sent a defective goods. So always purchase returns should be subtracted from purchases. So we need to show the net purchases only under the trading account debit side. So purchases, that is the reason purchases, to find out the net purchases we have to subtract net purchase returns. Purchase returns also called as return outwards. Along with that, the other direct expenses like freight and carriage expenses. Usually the freight and carriage expenses are incurred by owner from transporting of the goods from supplier location to factory location or business location. So such expenses are called as freight or carriage inward. At the same time, custom charges, insurance, if they specifically mention about factory insurance, that is also will be shown debit side of the trading account. Wages, because we pay the wages for the labor. For production we pay the wages on hourly basis, we calculate the wage, and laborers will work in the factory, workers or laborers will work in the factory, for them we pay wages. So wage is also direct expense. Gas, water, fuel, which are the important inputs which are used in the production process, so that is also considered as direct expenses. Royalty on production, suppose if the factory is not if owner is not having own factory, that land or that building is taken for the leasing, so in that case the owner has to pay the rent on that, royalty on the production, and factory rent, and cargo expenses, shipping expenses, import duties to release a product from while transporting of the goods from supplier place to factory location. If goods are transported through ship, and that goods should be released from supplier location to factory, so in that we owner has to pay the import duty, even custom duties also, dock charges, octroi, all these are the commission on purchases, and these are the direct expenses incurred at factory level. And how to recognize that is a direct expense? Any expense which any expenses which are incurred for the production process from raw material to till the finishing of the goods. So whatever the expenses incurred by the owner, that should be recorded under the debit side of the trading account. And the word of factory, production, manufacturing, these are linked with that item. Say factory rent, factory insurance, manufacturing expenses, production expenses. If these are used, these words comes in the trial balance, yes, these are the direct expenses. These are the indicators. We can easily keywords, we can easily recognize, we can easily segregate the expenses which are incurred at factory level. And coming to the credit side, the all the direct revenues, the major source of revenue for the business is sales only. Sales is a revenue. Sales is a core source of revenue for the business. So sales means sale of goods to customers. It may be cash or it may be credit. And we have to subtract sales returns, because when we sell the goods to customers, sometimes customers also receives defective goods. So the customers will return those goods to our business unit. Whenever a customer return the goods to a business unit, if customer receives a defective goods, so such returns are called as sales returns, also called as return inwards. So we need to show the net sales only. For that we need to subtract sales returns or return inwards from total sales. And finally, closing stock, this is an adjustment item. At the next level I'll explain the why we have to show the closing stock here. And closing stock is a stock which is left over in the business. The stock which is left over in the business or unsold stock, that will be shown credit side of the trading account. And if you look at this format, in that we have a particulars. Amount column is bifurcated into two columns, inner column and outer column. Similarly, credit side also the same pro forma. Particulars, amount rupees, it is bifurcated as inner column and outer column. The basic idea to bifurcate this amount column into two parts. Usually final accounts consist adjustments. Suppose earlier we had a discussion on purchases. Purchase returns always should be subtracted from purchases. We cannot show and we cannot enter the amount here. At the same time, we have to show how much purchases made by business in that financial year. What are the totals returns made to the supplier, that is return outwards or purchase returns. That amount we have to show in the final accounts. We cannot hide that. So if any say purchase returns are there, we need to do the adjustment in the inner column, not only for purchase returns but also wages. In the if you see the final accounts sum, adjustments are given. So all the adjustments which are related to trading account, say wages, there is a possibility of giving adjustment for wages. Suppose outstanding wages given or prepaid wages given, factory rent, outstanding factory rent is given, outstanding factory insurance is given, so prepaid factory insurance given. So these kind of adjustments we need to do. We need to do adjustment in the inner column. The final amount should be shown in the outer column. So the outer column amount will be considered as the final amount to calculate the gross profit or gross loss. And to avoid the unnecessary scratches and mistakes, we are required to maintain the inner column. And this is not a rule to maintain the inner column and outer column. This is for our convenient purpose. We need to maintain the inner column and outer column. And sometimes at intermediate level, we used to prepare the trading account and profit and loss account together. But at MBA level, at engineering level, I suggest you people to prepare the trading account and profit and loss account separately. So this is a pro forma for the trading account. That trading account is over. The pro forma explanation is over. And see the how do you get the gross when we get the gross profit and we get the gross loss. Suppose debit side, I have mentioned you the total expenses, direct expenses are recorded debit side, direct revenues are recorded credit side. if credit side balance is indication of what? Revenue. When the revenue is more than expense, a firm gets profit. When the revenue means credit side balance is more than debit side balance, it is called as gross profit, right? Revenues always more than the expense, firm gets gross profit. In the trading account we should use a word of gross, so it is a gross profit. Similarly, if debit side balance is more than credit side balance, expenses are more than incomes, expenses are more than revenue, it is called as loss. Which loss? It is gross loss. So we get either gross profit or gross loss. So we'll get either gross profit or gross loss under the trading account. So after this, we have to prepare the profit and loss account. Actually, it is a profit and loss account, not profit or loss account. Profit and loss account, because both profits as well as losses information will be shown under the profit and loss account. Debit side we record losses. Not only losses, expenses, indirect expenses and losses will be shown debit side, and the indirect incomes and profits will be shown credit side. So I say that profit and loss account is close to nominal account rule. If you observe the nominal account golden rule, debit all expenses losses, credit all incomes and profits. So debit side, how can we say that this profit and loss account is close to nominal account rule? See, in the trading accounts, for example, you got the gross profit. So gross profit should be transferred to carry forward to profit and loss account, either gross profit or gross loss. Suppose we got gross profit. So gross profit should be carried forward to profit and loss account. Which side? Debit side or credit side? As per the nominal account rule, debit side we record all the expenses and losses, credit side we record all the incomes and profits. So we got the gross profit, right? So the gross profit should be carried forward to profit and loss account credit side, right? As per the rule of the nominal account only, we have to transfer this. And suppose if you get the gross loss, that is carry forward to debit side of the profit and loss account. And before we learn the format or pro forma for the profit and loss account, profit and loss account is basically close to office or administration. If you find any office or administrative, promotional, financial, legal, selling. Let me repeat again. Profit and loss account is close to office. See, when products are manufactured, after manufacturing, any expenses are incurred by a business unit, that will be from manufacturing, after manufacturing to selling. After manufacturing to selling, any expenses are incurred by owner, that should be recorded debit side of the profit and loss account. What about the trading account? From purchasing of raw material to finishing goods. Purchasing of raw material to finishing of goods, any expenses should be recorded debit side of the trading account. What about the profit and loss account? After manufacturing of the product till selling of the product, any kind of expenses incurred by a business unit should be recorded debit side of the profit and loss account. So one thing you have to remember, any office, administrative, financial or selling, promotional, legal, that kind of expenses will be shown debit side of the profit and loss account only. And moreover, profit and loss account is close to nominal account. Debit side we record all the expenses. Which expenses? Indirect expenses and losses. Credit side we record indirect incomes and profits. So first we go through the debit side of the profit and loss account. First item is office and administrative expenses like salaries to the administrative staff, office rent, rates, taxes, lighting expenses for office, legal expenses, legal charges, postage, printing, insurance. See, some items are they specify in the trial balance. Suppose insurance expenses within the bracket given a factory, it means that should be shown debit side of the trading account. Insurance within the bracket given as office, it means that should be shown debit side of the profit and loss account. If nothing is mentioned, only insurance charges given. By default, we have to take debit side of the profit and loss account. This is applicable to all expenses. Electricity charges, power charges. Electricity charges incurred at factory level, at office level. So electricity charges factory is given. We should show debit side of the trading account. Electricity charges incurred at office level given P&L account debit side. Nothing is mentioned in the trial balance. Only electricity charge is given. It should be shown debit side of the profit and loss account. So like that, these are all office and administrative expenses should be shown. Auditing fee. After this, the selling and distribution expenses like carriage outward. Carriage inward is the trading account debit side. See, carriage inward is the trading account. Carriage or carriage inward. So from supplier location to factory location, when the raw material is distributed from supplier location to factory location, that expenses are incurred by owner. That expenses are called as direct expenses. This is before manufacturing only. This is carriage outward is what after manufacturing. See, when the goods are finished goods are distributed to customer outlets, customer houses. Goods are distributed to customer ordered product. Customer is getting the product to home delivery facility available. So when company is incurring expenses to deliver the product to customer houses, so that expenses are called as carriage outward. Carriage outward is the indirect expense. Carriage inward is the direct expense. Advertisement expenses, go down rent, brokerage expenses, brokerage. Bad debt is a loss. Commission paid, provision for bad debts. Financial expenses like interest on loan, bank charges, legal charges, arranging for loan, discount allowed or discount and rebate on the bills, and repairs and renewals, depreciation. Depreciation is also loss, which is a non-cash expenditure. Loss on sale of fixed assets, loss by fire accidents, also will be shown debit side of the profit and loss account. As I clearly mentioned is that profit and loss account debit side we record indirect expenses and losses. That is the reason all the indirect expenses are shown and all the losses also shown debit side of the profit and loss account. And credit side we record indirect incomes. Earlier we mentioned in the trading account credit side we record direct revenue source. The core source of revenue for any business unit is by selling of their product. By selling of their product, through sales only they will generate more revenue. That is the core source of revenue. So sales always should be recorded debit side of the credit side of the trading account. And here these kind of revenues, indirect revenues, the when a business unit is getting the revenue in other sources other than selling of the product. Suppose a business is having a property, every month they are getting rent, that is rent is the income, and a business is having fixed deposits, every month they are getting interest on that. A business has invested money in the stocks, they are getting dividend on that. So whenever they are receiving any sources that will be shown the credit side of the P&L account, profit and loss account. Like here other incomes like commission received, discount received, commission on, discount received, interest received, dividend received, and gain on sale of fixed asset. Gain is nothing but profit, and insurance claims. Even profit on sale of any other asset will be recorded credited of the profit and loss account. Then how to find out the net profit or net loss in the profit and loss account? Similarly, if debit side balance is more than, because debit side we show all the indirect expenses losses along with gross loss, we show all the items the debit side of the profit and loss account. If debit side balance is more than credit side balance, firm is getting net loss, because debit side is always expenses, credit side always incomes. Expenses are more than incomes, it is net loss. If credit side balance is more than debit side balance, because along with gross profit we are also recording all the indirect incomes. So if credit side balance is more than debit side balance, firm is getting net profit. So net profit like either we get net profit or net loss. So anything if you are getting net profit or net loss, that should be transferred to balance sheet. How we have transferred gross profit or gross loss to the P&L account? So in the P&L account we get either net profit or net loss, that should be transferred to balance sheet. Then next one, balance sheet pro forma. Balance sheet of the owner firm, we have to write the firm name. Merces. Merces, usually the firm name starts with the M by S. M by S is a Merces, the company name, or enterprises starting with the owner name. As on 31st March of every year. And balance sheet is a statement, it is not an account. If you observe the trading account and profit and loss account, both are accounts. That is the reason we have shown the debit and debit left hand side, credit right hand side. And while we are recording debit side, we have to start with the 2 as a format purpose, and the credit side we have to show by. Similarly, for profit and loss account also account, debit side we have to show while we are recording items in the profit and loss account debit side, we have to start with 2. Similarly, for credit side, we have to start with by. But balance sheet is not an account, balance sheet is a statement. Balance sheet is a statement of asset and liabilities. So all the liabilities will be recorded left hand side. All the assets of the business will be recorded right hand side. So these are the capital expenditure nature. Basically, trading and profit and loss account, they are revenue expenditure nature, and capital expenditure nature is balance sheet. So first we discuss the liabilities. So what a business owes, what are the obligations of the business should be recorded liability side. The first and foremost obligation for the business liability is capital. Owner's capital. Owner's capital always will be shown liability side, and we have to show that liability capital inner column. If any drawings are there, sometimes owner withdraws cash or goods from the business for personal use. So whenever owner drawing cash or goods for personal use, that is drawing that will affect on the business money and stock. So that should be adjusted in the capital only. So always drawings will be subtracted from capital. That is clearly given in the trial balance. Drawings, if it is given in the trial balance, the drawings must be subtracted from capital. Along with that, reserves and surplus. Usually the reserves and surplus will appear in the company's balance sheet. So here there is no chance of giving reserves and surplus. If given reserves and surplus, sometimes company, from company's point of view, there is a lot of importance is there for reserves and surplus. Reserves and surplus, they are the shareholder funds. The simply is to say that when company is getting the profit dividend, that has to be distributed among the shareholders. Sometimes company will not distribute all the profits to the shareholders. Company set aside some money to meet the future requirements. That is appear as a reserves and surplus. So reserves and surplus also, because company is not distributed 100% of profit to the shareholders. Company distributed only 80% of the profit to the shareholders. Rest of the 20% set aside by the company to meet the future requirements. That is also company's obligation. Loan on mortgage loans or bank loans. Income received in advance, outstanding expenses, bills payables, sundry creditor. Who are sundry creditors? Sundry creditors are the suppliers. It is an obligation of the business to repay that money to suppliers. And coming to the asset side, goodwill is the intangible asset. These are the intangible assets. Goodwill, patents, copyrights, trademarks, they are the intangible assets. And fixed assets like tangible assets like land and buildings, plant and machinery, furniture and fittings. And investment, there are two categories are there: long-term investments and short-term investments. The investment is given, it is a long-term investment, and rest of the items are short-term assets or current assets. Like stock is also called as inventory, sundry debtor are like customer, bills receivables, cash at bank, cash in hand. So the treatment is here, how we, when we either gross profit or gross loss we are getting in the trading account, that is carry forward to P&L account. And when we are getting the net profit or net loss, that is again carry forward to balance sheet. The fundamental rule is that if we are getting net profit always should be added to capital, right? Net profit is a positive thing, and owner has invested 5 lakhs, the owner has got 50,000 rupees of profit, the total money is available, the total money is 5 lakh 50,000 rupees including profit. But sometimes owner has got a loss of 1 lakh, the total capital is 5 lakhs, he's invested it, but at the end of the financial year in the net loss, a company has got net loss, so final amount is available, the final capital is 4 lakhs. The actual capital is 5 lakhs, because of the net loss, the capital has been reduced. So the fundamental rule is if net profit comes, added to capital, if net loss comes, subtract from capital. So this is a format for the trading account, profit and loss account and balance sheet. So, and we are going to discuss the final adjustments for the preparation of the final accounts. So adjustments are, before we are going for the adjustments, right? So we'll go and verify one simple sum. So in that we have let me show you a final account sum here. Let me show you one sum. This is about pro forma for the profit and loss account. The final sum on this is about balance sheet. See, this is a sum, a simple sum. The following balances are extracted from the books of Nikhil and Company on 31st March 2002. You are required to make necessary closing entries, and so in this sum we need not write any closing entries, and directly as per our syllabus we are required to prepare trading account, profit and loss account and balance sheet. So this is given like this. What is this? Usually trial balance is given as a problem, right? At the end of the, this is not trial balance is not prepared here, only the ledger balance is given directly. Even if you prepare the trial balance also, you will get the all the debit side balances if you transfer according to the formula of the preparation of the trial balance. Debit all expenses, losses and assets, credit all incomes, profits and liabilities. Using that formula you can prepare the trial balance, but that is not required. Sometimes they will give the final trial balance with the debit and credit. We will find the debit side value is same as credit side balance. Here the value is not given, and simple adjustment, only one adjustment is given like this. But one more sum I will show you that in this sum according to our syllabus, we are not required to write any closing entries. Our sum is completely on the preparation of the trading account, profit and loss account and balance sheet. These are the various adjustments are explained here. But before we discuss the various adjustments, and we'll go through one sum. Any sum we can take it here as a show you that here. I think this is, see, look at this. This is a complete sum. The question is here asked like this: from the following trial balance of Mr. Nitin, prepare trading account, profit and loss account for the year ending 31st March 2002 and also balance sheet on the date. So we are required to prepare trading account, profit and loss account and balance sheet for the sum. So exactly earlier I said, this is the trial balance. How can we say that is a trial balance? I said you that in the accounting cycle, first of all, we write the journal entries with the help of the business transactions, and after writing of the journal entries in the journal book, we'll prepare the ledger book where various ledger accounts are opened, and we'll transfer from journal book to ledger book. So that process is called as posting. Once the ledger balance is completed, finished, and we'll prepare the trial balance. So trial balance is prepared with the help of the ledger balances only. Once the trial balance is prepared like this, with the help of the trial balance, we are required to prepare final accounts. So this is the trial balance. There is a debit balance available like this. Debit side balance is 3,62,240 and credit side balance is also same. So this is the trial balance. So with the help of this trial balance, we are required to prepare trading account, profit and loss account and balance sheet. Adjustments are given like this. This many adjustments are there. We need to do all these adjustments while we are preparing trading account, profit and loss account and balance sheet. So let me explain the simple procedure for the preparation of the final accounts using various steps. In the next lecture, we'll discuss various adjustments and we'll discuss one sum. But until that, and I'll explain the brief steps for the preparation of the final accounts. This is the sum given in the question paper. By looking at this question, the first step is we are required to prepare the format for trading account, profit and loss account and balance sheet. The sample formats I will show you here. In my blogger I have prepared a formats for trading account, profit and loss account and balance sheet. So let me show you that the formats. These formats are useful to you. You can directly print these formats and you can directly solve the final accounts here. This is available in the PDF format. So trading account, profit and loss account, balance sheet format. So this is the format, right? You can print out this format and I can directly solve the sum here. See, trading account. This is the ready-made format. This is the balance sheet, and this is the working notes where I have to do adjustments in the working notes. So in the next class, we'll take a printout of this and I just do in the Word document because I don't have an option of the modern teaching techniques and where I cannot show directly by printing of this, and I will do in the Word document. But before that, the simple steps for the preparation of the final accounts are explained here. So by looking at the sum, and the first step we need to prepare the proformas like that. Earlier I have shown you the proforma, trading account proforma, profit and loss account proforma and balance sheet proforma. And after this, the second step is that how many adjustments given, like here we have 7 adjustments are there here. Any other adjustments? No, 7 adjustments are there. All these adjustments, we need to identify these items in the trial balance. In the question paper, we need to identify the adjustment items in the trial balance and we need to put the tick mark for that. We need to highlight that, right? So suppose here interest is charged on capital is given. So capital we need to highlight it. See, capital I have highlighted. And provide for doubtful debts on sundry debtor. So where you need to search debtors, identify that item and highlight it using of the pen or pencil and round it off or put the tick mark for that. Why we are doing like that? The reason is that while we are transferring of the items from trial balance to trading account, profit and loss account, balance sheet, if these items are highlighted, that is an indication that there is an adjustment for that, and we must be very careful that adjustment item will be shown inner column. Similarly, third one is depreciation on plant and machinery. Where the plant and machinery is available, that you need to highlight it. So plant and machinery is available, highlighting. Similarly, outstanding rent, we need to highlight the rent. So rent is, this is the rent, highlight it. Then taxes, rates and taxes, highlight it, and apprenticeship premium, and that is also we need to highlight this. And closing stock, no need to highlight anywhere, that will be shown two places, one trading account credit side and balance sheet asset side. The first step is preparation of pro forma for trading account, profit and loss account and balance sheet. The second step is highlighting of the adjustments in the trial balance and putting the tick marks either using pen or pencil, either doing round up or putting the tick mark according to our convenient, and it is an indication that there is adjustment item. While preparing of the final accounts, we need to, the concerned item we need to show in the inner column and we need to do the adjustment later. The third step is according to the order, we need to follow the order only, and we should not search the item, what are the items are shown, what are the items are there in the trading account. Instead of searching items in the according to trading account, profit and loss account, balance sheet, we need to, once you perfect the pro forma, suppose drawings given, we should follow this order only. First we finish debit items, after that credit items, and we should follow the order. Whatever the item we have highlighted now, that amount will be shown in the inner column. That is an indication that we need to do adjustment in the trial balance or profit and loss account, even balance sheet after posting of or after transferring of all the items from trial balance to trading account, profit and loss account, balance sheet. So the third stage where we need to transfer of all the items from debit side items and credit side items, including highlighted items, you need to transfer to trading account, profit and loss account, balance sheet. So that is the third step. And fourth step is we need to do adjustments. You know, the fundamental rule is every adjustment should be recorded two times in the final accounts. As for the double entry system of accounting, every adjustment must be recorded two times. We need to do adjustment. The common adjustments asked in the question in the examination we'll discuss in the next class. And once we do the adjustment, the next step is finalizing of the trading account to find out the gross profit or gross loss. After that, finalizing of the profit and loss account to find out the net profit or net loss, and finally balance sheet. So while you're transferring net profit or net loss to the balance sheet liability side, the fundamental rule is if net profit comes, that should be added to capital. If net loss comes, that will be subtracted from capital. So the balance sheet must be balanced at the end of the financial year as per the accounting equation. What is the accounting equation is stating that all the assets must be equal to liabilities plus capital. As per this rule, balance sheet must be balanced. If there is a difference amount in the liability and asset, somewhere we have done mistake. Either two cases may happen, and in this case trial balance is prepared, sometimes trial balance is not given in this using debit and credit. Sometimes the misbalance may be given, right, or many cases the trial balance given like this only, trial balance prepared, final trial balance given like this, and so there is no chance of missing of the items. So there is a one thing, there is a possibility of getting errors in the trading account, profit and loss account, either wrong posting or overvalue or undervalue, or sometimes omission of the item, the posting of that item. Any possibility any possibility is there to misbalance of sometimes the balance sheet may not be balanced because of these reasons. So in the next class we are going to discuss what are the various common adjustments asked in the examination along with one sum. So until that, and we'll focus on the proformas for the trading account, profit and loss account, and balance sheet. So we'll discuss rest of the items in the next class. Thank you one and all.